Do you hear that? That is the sound of your wealth evaporating. In 2026, you are walking through a minefield designed by the smartest algorithms in history. They know what you want to buy before you know you want to buy it. They know exactly when your willpower is low. They know exactly how to make parting with your money feel like nothing. You feel modern. You look successful. You have the job, the degree, the sleek apartment. But at the end of the month, you look at your bank balance and ask the same terrifying question: where did it all go? You aren't bad with money. You are just fighting a war against supercomputers using a rulebook from 1990. And you are losing. I'm an accountant, I've worked in investment banking, and I've seen the back end of how the wealthy operate. Today, we are going to stop the bleeding. We are going to break the 7 money habits that are keeping you broke in a world designed to drain you. Let's start with the habit that kills 90% of financial dreams: paying yourself last. Here is the scenario. It's payday. You see the deposit notification, you feel a hit of dopamine, you feel rich, but within hours, the auto erosion begins. Your rent is auto-debited. Your subscriptions, Netflix, Spotify, the premium AI assistant, whoosh, whoosh, whoosh. Then you go out for drinks to celebrate. You buy the groceries, you pay the phone bill, you tell yourself, whatever is left over at the end of the month, I will save. But in 2026, in a frictionless economy, there is never anything left over. The system is designed to extract every single penny you have available. The fix: you need a wealth firewall. You have to flip the equation. The moment, and I mean the second, money hits your account, 10% needs to vanish. Do not trust your willpower. Willpower is a muscle, and by 8 p.m. it's exhausted. Automate a transfer to a separate account that you cannot easily touch. If you earn $5,000, $500 disappears instantly. You live on the $4,500. Psychologically, your brain will adjust. You won't starve. You won't even miss it. But if you don't do this, 5 years from now, you will be in the exact same chair with the exact same bank balance, wondering why you're stuck. Habit number 2 is the silent killer: normalizing micro debt. Debt used to be scary. It was a big loan from a bank. Now, debt is friendly. It's cute. It's pink buttons at checkout that say pay in for. You want the new sneakers? $50 a month. The vacation? $100 a month. The takeout dinner? Put it on a tab. This is the habit of stealing from your future self to pay for a temporary feeling today. I have a strict rule. As an accountant, I need you to tattoo this on your brain. If you cannot afford to pay for it in cash right now, you cannot afford it. When you use buy now, pay later for consumer goods, you are clogging up your future cash flow. You think it's only $20, but you have 15 of those $20 charges. And if you are carrying credit card debt, you are volunteering to pay a 25% stupidity tax to the bank. 25% interest destroys any chance of wealth. Stop financing your lifestyle. If the money isn't there, the purchase doesn't happen. Period. Habit number 3 is living without a shield. Most people, even high earners, are walking a tightrope between 2 skyscrapers. It's windy, the rope is slick, they drive nice cars, they wear nice watches, but they are one bad email away from total ruin. One layoff, one health scare, one shift in the economy. If you have zero cash in the bank, you operate from a place of fear. You stay in a toxic job because you need next week's check. You tolerate bad clients because you can't afford to lose them. The fix: you need a liquid shield. Before you invest in stocks, before you buy Bitcoin, you need 3 to 6 months of pure, boring cash in a high-yield savings account. This isn't an investment, it's insurance. When you have $20,000 sitting in the bank, you walk differently. You negotiate differently. You sleep differently. Money in the bank buys you bandwidth. It buys you the ability to say no, and no is the most powerful word in finance. Habit number 4, financial blindness. We track everything in 2026. We track our steps, our sleep cycles, our calories. But do you track your burn rate? Most people suffer from lifestyle inflation on autopilot. You get a raise, and immediately the algorithms start showing you nicer things. You upgrade the car, you get the nicer apartment, you start buying the organic, lab-grown premium groceries. You are earning more, but you are just running faster on the treadmill. You aren't moving forward. The fix: you need to become the CFO of You Inc. I love spreadsheets, but you don't have to. Use an AI finance tracker. Just answer one question. How much does it cost to be you for 30 days? If you don't know that number, you are flying a plane blindfolded. Set a date night with your finances once a quarter. Open the apps. Look at the outflows. You will be shocked. I spent $400 on subscriptions I don't use. Seeing the numbers triggers a wake-up call. You cannot fix what you do not measure. Habit number 5 is a controversial one, focusing only on saving. There is a mathematical limit to how much you can save. You can stop buying coffee. You can live in the dark to save electricity. But the limit is 0. You cannot save more than you earn. However, there is no limit to how much you can earn. I see people spending 10 hours a week trying to save $20 on groceries. That is poor thinking. Wealth is a simple equation. Income minus expenses equals the gap. You need to attack both sides. Yes, control your spending. But in 2026, the tools to expand your income are infinite. You have the internet, you have AI leverage, you have the gig economy. If you feel stuck, stop obsessing over the $5 latte, buy the latte, drink it, and use the caffeine to figure out how to add $5,000 to your income this year. Shift your mind from scarcity, protecting the little you have, to abundance, creating what you need. Habit number 6 is boring, but it's expensive. Tax complacency. Taxes are likely the single biggest expense of your life. If you work, you pay. If you spend, you pay. Rich people don't evade taxes. That's illegal and stupid. Rich people avoid taxes. That's legal and smart. The government writes tax codes to incentivize behavior. They want you to save for retirement. They give you 401ks and IRAs. They want you to start a business. They let you deduct expenses. If you are just an employee taking the standard deduction, you are paying full retail price for your citizenship. Educate yourself. Are you maxing out your tax-advantaged accounts? If you have a side hustle, are you deducting your laptop, your home office? Don't tip the IRS more than you have to. That is money that should be compounding for your family, not the government. Finally, habit number 7, the tragic one, waiting for the perfect time. I'll start investing when I have more money. I'm waiting for the market to crash. I'm waiting until after the election. Here is the truth. You cannot time the market. Professionals with supercomputers cannot time the market. You definitely can't. Every day your money sits in cash. It is dying. Inflation is eating it alive. The magic ingredient of wealth isn't picking the winning stock like Nvidia or Apple. The magic ingredient is time. If you start investing at 25, you can be a millionaire by retirement with half the effort of someone who starts at 35. You are losing the exponential curve. Don't try to be a wizard. Buy the market, low-cost index funds, automate it. $100 a week, $500 a month, just get on the train. The train is leaving the station whether you are on it or not. So let's go back to that room, the one with the hole in the floor. You have the tools to plug it now. 1. Pay yourself first, automate it. 2. Kill the micro debt. 3. Build a liquid shield. 4. Track your burn rate. 5. Expand your income. 6. Optimize your taxes. 7. Start investing today. These habits are not sexy. They won't make you rich by next Tuesday. But in a world of chaotic, high-speed noise, boring is the new rich. Stop letting the algorithms dictate your life. Stop letting the world happen to your wallet. Take control.